CPI happened this morning and it caused some huge spikes in the market. With any of these major news events, we often see a lot of volatility, and this time was no different. Even with that huge spike, the CPI report didn't show any crazy numbers. In fact, the inflation rate met expectations and fell to 6%. Monthly core CPI came out slightly higher than expected at 0.5%. We cover news events daily during our live streams, and we'll be back tomorrow covering more news at 8:15 a.m. Eastern Time right here on the A1 channel. Alright guys, let's go ahead and check out the market heat map to start off with. Let's see how all of our assets are trending so far today. So right up top here, taking a look at our biggest movers to the upside so far today. I see CAD JPY, AUD JPY, NZD JPY, USD JPY, GBP JPY, and CAD CHF seem to be our biggest movers to the upside so far today. So a lot of yen crosses making moves to the upside. CAD JPY being the biggest mover to the upside so far today, up 1.76% on the day so far. Off that CPI news, why don't we check out our US indices as well? NASDAQ 100, S&P 500, and US 30 are our three major US indices, and they're all up on the day. NASDAQ up 1.82%, S&P up 1.53%, and the US 30 up almost 1% there off of that CPI report. So CPI met expectations, fell down to 6% from 6.4%, and core monthly CPI came out just a little bit higher at 0.5% when it was forecasted at 0.4%. All right, let's check out our biggest movers to the downside so far today. Down here, I see gold, Euro CAD, GBP CAD, USD CAD, and Euro AUD. So it seems like gold as well as a couple Canadian dollar pairs seem to be our biggest movers to the downside on the day. Now let's go into the watch list, check out our buy and sell signals. Here they all are. These are all of our buy and sell signals. I could bring in these neutrals here like this, and we would be able to see a complete list of all of the assets that we track here in the Edge Finder, but we don't really want to look at neutrals. We just want to look at buys and sells. And in fact, I just want to look at currency pairs only. So I'm going to remove any indices or commodities that we might have. And there we go. So our strong sell list and our strong buy list have actually shortened up today. USD CAD and CHF JPY are our two strong buys listed. USD CAD has just really hovered around that +8 score strong buy bias for a while now. Aussie NZD, Aussie USD, both strong sell scores of -10, and same thing there. Aussie USD has been a strong sell bias score of -10 for a while now. In fact, we covered that pair yesterday. So if you're interested in a full in-depth analysis breakdown of Aussie USD, you can find that in yesterday's video. You can go check out all of the news and numbers surrounding Aussie US. But let's see, what pair do we want to take a look at today? So we took a look at a sell yesterday, Aussie USD, that strong sell score of -10. I want to take a look at a strong score, whether it's a strong sell or strong buy. So that leaves us with 4 options here, really just 3 because I looked at Aussie USD yesterday and I spent so much time looking at USD CAD last week. I think we covered it twice because it was still hovering around that strong buy bias score of +8. And we took a look at a sell yesterday, so I want to look at a buy. So I'm thinking our best option here is CHF JPY, which will still be an interesting pair to take a look at with that strong buy bias. So why don't we take a look at CHF JPY? And just for fun, why don't we compare it to what we see on the actual chart here? So I actually have CHF JPY pulled up. We're taking a look at a lower time frame chart, 15-minute chart right here, and we can see that it's definitely made some nice upward momentum right here since yesterday's lows. So taking a look right over here in this zone right here, this is yesterday around the time the US markets opened, and it's been making some higher moves right here and sitting a little bit higher today than it was yesterday. And if we look at a higher time frame chart as well, we can take a look at, say, like the 4-hour chart. We can definitely see that this thing has been trending upwards for a while now, making, let's see, ever since January pretty much. If you held on to this thing has just been rallying and moving to the upside for a while. And that's following in suit with our CHF JPY strong buy bias score of +7. And I'm just curious as well to take a look at the historical backtest too for CHF JPY to see what the edge finder score has been on those days that it has continued to move upward. So let's see CHF JPY right here. We can see that it's actually been at a pretty solid buy bias for a while now. Ever since, so technically it gets a buy bias with a score of a +3. So since January 25th, this thing has sat or hovered around a buy bias for a little while and then broke up into the strong buy bias. +5 is not a strong buy bias, but that's a pretty solid score as well. But ever since February 7th, it looks like the Edge Finder has had this thing listed as a buy. And if we take a look at this again, we'll even take a look at the daily chart here. This thing has certainly continued to make some nice moves up, and up ever since, even before February, but the Edge Finder caught it with all of that data that it pulls in. And yeah, that looks like it's a pretty successful trade there. CHF JPY, strong buy bias to the long side. Do you have any questions about any of our products or services? Right now, members of the A1 Trading team are standing by, waiting to assist you. You can head over to our website, a1trading.com, and click the icon in the bottom right-hand corner to chat with one of our team members live. You can also go to a1trading.com/contact and fill out the Contact Us form, and someone will get back to you shortly. We have our helpful and friendly members of our support staff ready to chat with you anytime Monday through Friday from 9 a.m. to 5 p.m. Eastern Time. So what are you waiting for? If you have any questions, feel free to chat with us live right now on the A1 Trading website. Strong buy bias score of +7. COT data is a 0 score and retail sentiment is a score of +1. Let's get into those numbers right over here. So COT data or institutional trader data on the Japanese yen, currently 32.81% long, 67.19% short. And for the Swiss franc, we're seeing something similar, 34.48% long and 65.52% short there. So institutional traders actually both favored short on the yen and the Swiss franc. That's why we're getting that 0 score there. Retail sentiment, on the other hand, 81% short from the retail traders, from the day traders, and 19% long there. Our seasonality is a score of +1. And taking a look at this chart up here, we can see that in the month of March, over the last 10 years, historically speaking, when we just isolate the month of March and look at it, each of the last 10 years, how has CHF JPY performed? Well, we can see that it's performed just a little bit bullishly, and that so far has been the case this month as well. Our trend reading is a score of +2, and we can take a look at a really nice upward trend move over the past couple of days, the past couple of weeks even potentially. It has just been continuing to make moves to the upside, making some higher highs here, and hopefully price forecast predicts that it will continue to do that as well. Our fundamentals finishing up here, inflation, unemployment, and interest rates all have scores of +1, and GDP growth has a score of 0. So why don't we get into those right over here? So the yen and the Swiss franc currently have a GDP growth, monthly GDP growth of a 0%. Inflation on the yen, 4.3% compared to 3.4 on the Swiss franc. Unemployment in Japan, 2.4% compared to 2.1% there. And interest rates on the yen, negative 0.1%. And only 1% on the Swiss franc.
Please be very careful. As always, guys, many traders lose a lot of money gambling on the news. So please don't let that be one of you. Be very careful. If you're trading the spike, hey, that's a decision you get to make. You're an adult if you're trading this stuff. But please be very careful. It's very easy to blow a lot of money thinking you know what the news is going to do. Been doing this for years and years and years. I have no idea what the news is going to do on the spike. I think that is more gamblers' play. We like to trade the aftermath. So let's keep an eye on this one, guys, and we'll see what the CPI numbers bring for us here today. All right, and CPI, here it comes. We'll see some volatility here. An initial move to the downside there on gold, dollar yen spiking up, S&P down a bit, Euro USD. And guys, remember, if you have numbers for us, please share them in the chat. A little bit of a reversal here. Dollar yen pulling back. We have gold shot to the downside and then immediately rallied off of that. Very interesting to see that. Euro dollar spiking down and coming right back up. 0.5%. So we hit our, I believe we hit our 6%. Is that correct? Let me double check that that is the case. Yes. So we had 6% and 0.5% core inflation, causing some S&P 500 rallies here. Very interesting to see there. Dollar yen uniquely not really making much of a move. Gold rallying back up to 1909. Not a huge reaction here, to be completely honest, guys. It seems like the market must have sort of guessed it accurately to most degree, as we don't see that much of a reaction at this time. We'll have to watch and see how that decides to play out. Again, we are looking at 15-minute charts. So yes, there are some volatile moves here, but nothing fully pushing one direction just yet. And I will say this, guys, this is why we warn against trying to trade spikes. If you were trying to trade one direction here, if you tried to get triggered into a short trade, it was a tough day for you, because you get triggered into the short and the market immediately spikes back in the other direction before your order even fully gets filled. Like, it's that crazy to try and trade the spike. Again, we talk very heavily against doing that here on the stream, as that is sort of, for lack of a better term, mostly gambling, in my personal opinion. The euro is rallying here. It seems like the dollar idea. Let's see if we can just pull up a DXY idea for a second. So DXY down here this morning, and look at that dollar. Let's see, how big of a move was that? Let's go look at DXY again. That's a dollar. I mean, this is a 15-minute chart, so it's just retesting the lows of this this support. Again, we will see how this level reacts to this going forward. Gold hitting 1930 today. Let's see if it happens, man. This is going to be interesting. So again, to go over the numbers with you guys here, we have 6% coming out year over year inflation as expected. We have also core CPI at 0.5% compared to the 0.4%. So that is a higher than expected number there, causing some volatility for sure across the board. Now, interestingly enough, you would kind of expect that number to be slightly causing a bit of dollar bullishness. But to be fair, though, again, a lot of people may have even expected higher inflation than this. So this forecast is, like I said, it's a forecast. It can be right, it can be wrong, and sometimes it's off. So this number, 6% today, may have been just sort of short of what the market was thinking in terms of hotter than expected inflation numbers. Despite that, let's go back and take a look at gold now, see what's going on. Gold on the 4-hour chart, capturing back some of its losses, but still kind of a spiky chart. You've got things like dollar yen, which have spiked in both directions. You've got things like euro USD also has done the same. I mean, it looked super bullish a second ago. Now it's back into the red. I mean, this thing is really going crazy. You've got the NASDAQ 100 back and forth yet again spiking, and a really weird candle today, guys. This, you know what I call this? This is the doomsday for the buy stops, sell stops. These are the worst trading days for buy stops and sell stops, because again, you are gambling that the market's going to do a ginormous move, and if it doesn't do anything, or if it just goes back and forth, you lose everything. That's the danger of trying to do those sort of trading strategies. Despite that, volatility will likely be high for the remainder of the trading day with this number, as the market sort of makes its moves, makes its adjustments according to that. It is likely to cause some volatility across the board, despite not having that initial one directional move that many traders were expecting. S&P 500 here also making a bit of a decline, so very interesting to watch. 6%, that means no more increased rate hikes then? Well, so it depends, right? It's going to be very interesting to see how that plays out. The Federal Reserve has not announced. I believe it's next week, they have their announcement of their next interest rate hike. It is hotly debated whether it's going to be 0, 25 basis points, or 50 basis points. It's a very confused world right now. This number definitely plays into that, however, though, with inflation still being high, but not too hot, I suppose, could suggest slightly that maybe there's a little bit more wiggle room for the 25 basis points, which is arguably why maybe you saw a little fear in the dollar. But now, again, look at the dollar go now. Euro USD here pulling back again. Double topped. I mean, look at this, guys. This is absolutely crazy. This may not be the top for the euro today, but can you believe that this thing came into literally 1 pip of the top? And, this is the thing. Sometimes people will say charts are total nonsense. Well, look at this. It literally pinned up to the exact same top. That is crazy. So, Yeah.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.